Hi everyone and welcome. If you're thinking about buying your first home in Ontario, then you're in the right place. I'm creating this video to help people with everything they need to know before making their first real estate purchase. For those of you who don't know me, I'm Fiona Gosling and I've been helping people navigate residential real estate full-time since 2007. I firmly believe that with the right guidance, real estate can help you to secure your financial future, and I love helping people get into the market. It is such an exciting time and such an exciting thing to do. While buying a home can be exciting, it can also feel pretty overwhelming, and there's a lot of steps and a lot of terminology and a lot of decisions to make. It is also likely the largest financial decision that you've ever made, and that alone makes it pretty nerve-wracking. In this video, I'm going to walk you through this process step by step from getting ready financially to closing day. I'll also break down all of the money that you need and when you need it, as well as some of the different government programs and incentives that are available to first-time home buyers as of today, which is September 2025. And by the end of it, I hope that you'll have a clear roadmap to help you move forward with confidence, and you won't need ChatGPT to lie to you about certain things. The first thing is getting ready financially. So before you start going out and scrolling through listings, it's important to get a really clear idea of your finances and get your financing in order. Here's what that means. First of all, you got to take a look at your budget, your income, your expenses, your savings, and you need to get very comfortable with how much money you're comfortable spending in a mortgage, in your property taxes and your utilities and your maintenance fee every month. It's important to keep whatever that number is in mind, because sometimes if you qualify for a higher mortgage, you've got to keep your budget in mind and make sure that you're going to be comfortable making that payment every month and not taking on more debt than you're comfortable with, because it doesn't do you any good to be house poor. Before you start scrolling through listings, it's important to get all of your finances in order. And here's what that means. First of all, you've got to do your budgeting, and budgeting is very boring, but you have to do it. You have to take a look at your income, your expenses, and your savings. You're going to want to know how much you can comfortably spend each month on your mortgage, as well as your property taxes, your utilities, and your maintenance. And this is really important to keep in mind. Even if you qualify for more money, you should always keep in mind what your budget is. And once you've sorted out what you're comfortable paying each month, you need to speak to a mortgage broker, which will take us to step number 2, your pre-approval. So you should be getting pre-approved by a mortgage broker before you go looking at houses. And the reason you do this is you don't want to be looking at a price point that you can't afford to buy. So by getting pre-qualified and speaking to a mortgage broker, you'll be able to know for sure what you can get financing for, and it'll give you a more clear picture of your buying power. And then when it comes time to putting in an offer, you're in a much stronger position to move forward. One note on mortgage brokers is you can speak to your mortgage representative through the bank, or you can speak to an independent mortgage broker. The difference between the two is that a bank mortgage broker can offer you the very best rate that the bank is offering. And a mortgage broker is going to work with you and then shop you around to find the best available rate from a wide range of lenders. Whichever route you choose to go, you should make sure that they've explained the different types of loans that are available to you and that they're matching you with one that suits your short and long-term goals as well as your risk tolerance. A good mortgage broker will help you understand the various loan options available to you. And if you want a referral to somebody great, shoot me an email and I'll connect you with somebody. The next thing to keep in mind or look at is your down payment. So in Canada, you're going to need to have a minimum down payment of 5% for homes under $500,000. For any purchase price between $500,000 and $1.5 million, it's 5% on that first $500,000 and 10% down payment on the balance. And then for homes over $1.5 million, you'll need a 20% down payment. Any loan that has less than a 20% down payment is going to require that you have CMHC insurance, which protects the lender if you default on the loan. The cost of the insurance is determined by how much you put down. So the less money you put down, the higher the premium is going to be. I don't want to get too bogged down in the details of this here, and your mortgage broker will be able to help you understand the specifics as those relate to you. I should also say that CMHC is not the only mortgage insurer in Canada. So you have options, but your lender will help you with all of that. The next thing to consider is your credit score. Lenders are going to want to see a good credit history to qualify for an A lender. And the A lenders are the ones that are offering the best rates and the most flexible terms. So if you want to get in with an A lender, you're going to have good credit. And if you don't have good credit, you should start by cleaning it up or establishing your credit rating right now. The higher your credit score, the better your mortgage options are going to be. So once you're all qualified and you know how much money you're comfortable spending and you're able to spend, we get into the buying process. This is the step-by-step journey that most first-time homebuyers go through. The first thing you're going to want to do is choose your realtor. You're going to want to work with somebody who knows the market that they're buying in. Each community has its nuances, and you want a realtor who knows the area, and that can be totally invaluable to you. You also want someone who is protecting your best interests and not the listing agent who is representing the best interests of the sellers. Once you've found a realtor you're comfortable with, you're likely going to need to sign a buyer's representation agreement. And that's the agreement that essentially is you hiring your realtor to help you find a place. It also creates a fiduciary duty for the agent to tell you about properties they hear about that might work for you, and make sure that they're informing you and keeping you up to date on those things. Some people do like it to go it alone, contacting the listing agent directly to see properties. The trouble with this is that the listing agent is working for the seller to get them the best price in terms for the seller's house. And you deserve to have your own representation and make sure that you're paying fair market value for the house and that your interests are being protected throughout the process. House hunting. This is the fun part. This is where you get to get out and look at properties that fit your budget and your wish list. As you get out and see things in person, you'll start to be able to narrow down to houses or condo buildings in certain areas that would work for you. And at this stage, it's like a big funnel. You'll start with seeing a lot of things and then narrow it down so that when you see the right one, you'll know it. Once you've found something that you like enough to put in an offer, because remember, no house is perfect, your realtor is going to guide you on price, conditions, and negotiate the offer for you. So typically you're going to price is price. A good realtor is going to be able to tell you what market value says that house is worth. And if they know the market well, which they should, or you shouldn't have hired them, they're going to be able to tell you if the seller's asking price is out of line with the market value of the houses. And then they should be able to negotiate strongly on your behalf to make sure that you're able to either get the house for market value or less than market value ideally, or that you are empowered to be able to walk away from that if you are in a position where you have to overpay for the property, or you know that you're overpaying for the property and you want to do that. They're also going to advise you on conditions. And the conditional period is typically where people will have a chance to do financing, home inspection, and review status certificate of a condominium document. So that's typically around a 5 to 7 day period, but I'm going to come back to that. So once we've negotiated the offer and we have an accepted offer in place, you're going to need to come up with a deposit within 24 hours. Typically, a deposit in my area, the West GTA, is within 24 hours of acceptance. And typically that deposit is 5% of the purchase price. So it's really important that you have that deposit money accessible prior to you making an offer. And generally that means as you start getting more and more serious about your house hunt, that you've sold any investments that you might need to make. So once we have an accepted offer and you've paid the deposit, we're into the conditional period. And generally speaking, you're going to have about 4 to 7 business days, depending on the circumstance, to satisfy those conditions. And during this time, nobody else can buy the house. You've tied it up, but it gives you a chance to do your due diligence, to have a home inspection, confirm that your financing is in place. And if you're buying a condo, this is when you and your lawyer will be able to review the status certificate and do a deep dive into the financial health of the building. The status certificate is where you're going to find out if the building is being sued by anybody, if they have any special assessments coming up, or if there's kind of a history of systems breaking down that have not been repaired, or if there's a major repair that's at the end of its lifespan and it's not been budgeted for. Those are all things you're going to want to know about before you commit to buying the condo. Now, sometimes buildings are going to have work that needs to be done, and that's not necessarily a bad thing. But what is important is that you know about it, and that if there's a special assessment coming down the line, if it's being taken care of, that the seller is paying for that, or we're negotiating that into the price. So it's really important that you have an opportunity to review that status certificate with your lawyer if you're buying a condo. Once your conditions have all been satisfied, we're going to create a document called Notice of Fulfillment of Conditions, and that's when it is you officially buying the house. So the house is yours once we remove those conditions. The deposit stays in trust in the listing brokerage's trust account, and it's credited towards your purchase price on closing day. After it's a firm deal, you basically wait. So a typical closing period is between 60 to 90 days, but that's all negotiated in the offer process. This is a pretty exciting time and you'll generally have a couple of revisits where you can go back and have a look at the property to do measurements or plan any renovations that are being done. So when closing day comes, that's the day you actually get the keys to your new place. A few days before closing day, you're going to meet with your lawyer to sign final paperwork, pay the balance of your down payment, the part that wasn't paid in your deposit, and then you get the keys to your new home. Is a very exciting thing to happen. So once you've committed to buying a house, the most important thing you're going to have to keep in mind is the money that you need and when you need it. So buying a house isn't just about the down payment. There's lots of other costs that you need to budget for, and knowing what they are and exactly when that money is due is going to take all of the stress out of the situation, or at least a lot of the stress out of the situation. So I want to break it down for you. The deposit is due immediately after acceptance. And as I said, that's about, generally speaking, around 5% of the purchase price. And it's usually due within 24 hours of acceptance. So as you get closer to making an offer, you need to have that money liquid. That deposit is held by the listing brokerage's trust account and later goes towards your down payment. So that's credited towards your down payment. If during your conditional period, you decide that you're not going to move forward with that particular house, like something comes up in the home inspection you're not comfortable with, or the status certificate, you don't get your financing, your deposit is going to be returned to you in full without deductions in your sole and absolute discretion. But in most cases, we're going to move forward with the purchase and that money is credited towards your down payment. Your down payment is due on closing day. So your down payment is the balance of the money that you're putting down. So your 5% or your 15 or 20%, however much money you're not mortgaging is due on the day that the property closes. And so, for example, your deposit has already been paid, so you're going to subtract that from your down payment amount. For example, if you're buying a $700,000 home and you're putting 10% down, that's $70,000, and you've already paid $35,000 deposit, then you're going to owe an additional $35,000 on closing day. The balance of the purchase price is the amount that you're mortgaging, and that will be advanced to your lawyer from whomever you're getting the mortgage from. There's also some closing costs to keep in mind, and those include things like land transfer tax, which is the biggest one. So the government taxes land every time it changes hands. And the tax is calculated as a percentage of the purchase price, and there's tons of online calculators out there to figure out just how much you'll owe. As a first-time home buyer, you will be eligible for a rebate on that tax. But I'll get into that later when we talk about some of the provincial government and federal government programs in place to help first-time home buyers. If you're buying a property in Toronto, you're going to have an additional land transfer tax. So unfortunately, you just get taxed twice. So land transfer tax, you got to keep in mind. Legal fees, you have to keep in mind. And those are between $1,500 and $3,500. You're also going to need to budget for title insurance, which is usually a condition of your mortgage. A really good idea to get. And in my experience, it's often cheaper to close while buying the mortgage insurance than not. And that can be between $200 and $800. The adjustments will be calculated by your lawyer on closing day, and those are minor costs. They're things like it accounts for any portion of taxes or condo fees or utilities that the seller has prepaid, and it's calculated to the day. So if they have paid for all of the condo fees for the month, but you move in on the 15th, then you're going to credit them back for the 15 days that you're living there and they're not. So all of those expenses are paid through your lawyer at closing, and they're all due at the same time as your down payment. Your first mortgage payment generally happens about a month after you get the keys. So it's kind of nice when rent is due at the first of the month, your mortgage payment comes out at the end of the month. And that will all be dictated and laid out by your lender. There's a few other upfront costs that you're going to need to keep in mind throughout the process. A home inspection, if you're going to have a home inspection, usually that's going to be around $400 to $500, and that's going to be paid during that conditional period. There might be an appraisal fee. So if your lender needs to have the property appraised, which they will, sometimes that is the responsibility of the buyer to pay that out of pocket, and sometimes it's covered by your lender. And then you're going to have your moving costs, like the movers, the truck rental, whatever it is, and that's going to be paid on moving day when you incur the expense. And then you're going to have all of the pain of setting up utilities and all of that setup stuff. You're going to also need to have home insurance in place. So when you map it out like this, you can see that buying a home isn't coming up with all of the money all at once, but understanding what you're going to need and when you're going to need it will help make sure that you have a really clear financial picture and timeline, and hopefully will take away a lot of the stress involved in this. Okay, government programs and incentives. These change all the time. So the government wants to help you get into home ownership and make it a little bit more affordable. So they've created a variety of programs to help first-time home buyers in Canada and in Ontario. These are always changing, but as of September 2025, these are your options. You have the first-time home buyers plan, where you can withdraw up to $60,000 from your RRSP tax-free to put towards your down payment. And if you're buying it with a partner, you can combine to withdraw up to $120,000. It is important to keep in mind this money does need to be repaid to your RRSP within 15 to 20 years. And the reason I say that is because you have a few-year grace period from when you first withdraw the money before you have to start repaying the loan. Officially it's 2, but they've had a 5-year extension for the last little bit. So depending on when you're actually making the purchase, 17 years, you got to start repaying that and then repay it every year once you start. There's the first-time home saving account, and this is a new program. It lets you save up to $40,000 tax-free for your first home. So contributions into that program are tax deductible, and withdrawals for your home purchase are also tax-free. So that is a new program, and it is also well worth exploring if you have some money that you can save in that kind of tax sheltered environment. The land transfer tax rebate is something that I already touched on. So first-time home buyers can receive up to $4,000 back in that land transfer tax that you've paid. If you're buying under a certain threshold, land transfer tax is not applicable at all. I think it's $386,000 or something like that. I would check me on that. But above that, it's a sliding scale, and you can have about up to $4,000 credited back on that. If you're buying in Toronto, there is an additional municipal rebate, but then you've also paid the additional land transfer tax. There's also the first-time homebuyer credit, and this is a federal non-refundable tax credit worth up to $1,500. And you can access this when you file your taxes in the first year after you purchase the property. The credit reduces the income tax that you owe and is not a cash refund. So if you don't owe any tax, then nothing comes back to you. But if you do owe property tax, then you can reduce that bill by $1,500. So all of these programs are out there to hopefully help make home ownership easier for you to get into. Buying your first home may feel like a big challenge, but remember, you do not have to do it alone. From working with first-time home buyers, I know how overwhelming it can be, and it is such a huge purchase. But with the right planning and the right team and taking advantage of the programs that are available to you, home ownership is within reach, and it is, in my opinion, the best financial decision you can make for your life. You've got to pay rent somewhere. You need to live somewhere. And by investing in the right neighborhood and the right building and the right property and being strategic about that, it is such a good thing you can do for your financial well-being. I hope that you found this video useful. If you did, please like, subscribe, share it with someone else who's starting their home buying journey. If you want a more personalized advice, feel free to reach out to me if you're looking for something in the West GTA. But if you're looking to buy somewhere else, somewhere that I don't sell or work, I can definitely connect you with somebody great. I know it is overwhelming, the number of realtors out there. Some are good and some are not so good. And I think it's really important that you connect and have help from somebody who genuinely cares about helping you achieve your goals. So I work with realtors coast to coast. If you're not buying in Ontario, I can help you find somebody. So thanks so much for watching. Good luck on your path to homeownership.